I mean, I don't know if any of you guys were listening to the conference call this evening with Snowflake's Q1 2024 earnings, but I would say rough is probably the first word I would use to describe it. So rough that I mentioned the fact that this to a colleague, and they said, "Matt, how rough? How bad?" And I said, "Well, I've never made a Snowflake video before, and I feel the urge to go home and make one." So I had the opportunity on the drive home to listen to 58 minutes or so of the conference call, 20 minutes of which were management giving their normal speech of, how the quarter went, and then coupled with an additional 30 to 35 minutes of questions, mostly focused around why revenue for the year is going to be rather flat in comparison to Q1. And so for those of you that are listening in now, they did really well year over year comparatively from fiscal year 23 to 24. Snowflake does things a little bit differently. They focus more so on fiscal year 24, meaning, they have everything kind of a year ahead, and a few other tech companies do that as well. But what they were referring to was basically the first 3 months of 2023, right? How did it fare? It fared relatively well on a revenue growth basis year over year from 2022 to 2023. Things continued to go in the right direction for the most part. Most of the headlines looked really, really good. Then you started to listen into a lot of the commentary towards the end, towards when Mike, if you listen to this, I don't think you will, but he's the CFO. And part of this, and I'll get to kind of the end of the soliloquy there, part of this was so hard because Mike was coughing about every 30 seconds. And Mike, I really do hope you feel better. The other analysts as well that were in the questions and the Q&A part towards the end were also wishing him the best. It was bad. The worst coughing fit I've ever heard on a conference call in my entire career. And I've been doing conference calls now for about 10 years or so. Tough. It was tough. That being said, the things that I guess initially bothered me about the conference call was specifically around the focus on revenue, flat revenues, declining efficiency. A lot of talk about how the product is so efficient that they're basically pricing themselves into lower revenue, and coupled with, also the macroeconomic environment, which I get. But the fact that you have now revised your guidance to about 2.6 billion in terms of fiscal year 2024 or full year 2023, if you're talking about it from how we look at time, means that you're pretty much holding things slightly above guidance from Q1. So from Q1 to Q4 of this year, Snowflake is basically, at this point in time, alluding to that there's going to be very little growth within the organization. So over the past several years, and I'll pull up some slides here for us, so you guys don't think I'm completely making this up, is they basically went from, sorry if I'm giving people whiplash here, massive year-over-year product revenue growth, 120% in 2020, 106% in 2021. Last year, 2022, they had 70%. To this year, only going to 34%. But all of that growth, the majority of that growth, is in the 630 odd million that they made in Q1. The rest of it, maybe 5% or less percent of it, is going to happen from Q1 to Q4. A drastic slowdown. And so when you look at the share price declining massively after hours, back below 150, you start to fully recognize why it's actually coming in that way. And so the thing that bothered me, I think, a little bit overall about the call was there's some positives. Let me talk about the positives. The positives is that they're getting into AI. I thought that was prudent of them. The negative is that the fact that they're also getting into AI. And I'm not talking about the negative as a part of specifically a view or comparison against how I'm a Palantir bull and how Snowflake is what Snowflake is. I'm talking about it from a perspective of they weren't able to develop the AI capability in-house. And so they had to buy a 40-person company with money that was generated from the business to be able to buy that and bring that in-house. So they have, I don't know, 1.5 thousand people, I think. Let me just double check. 1.6 thousand people, 1,600 people that they have in their R&D department. And they weren't able to generate that product in-house. So they had to buy 40 people to be able to bring that capability in-house. That's just weird, right? Like, and then they mentioned later on in the call that they're expensive. And then Frank, lovely to hear from him on the call, did a pretty good job, I would say. He initially answered one of the analyst questions about how soon would we be able to expect this to get up and running, meaning the AI capability and Neva acquisition that they just had. He said, things will happen pretty quick, second half of this year, for the easy stuff. Now, of course, so those of you guys that recognize how difficult it is to, one, get large language models in order and data on its own, and then couple that with having AI actually connect up to it. And Mike was asked a little bit, or maybe it wasn't Mike, it was one of the other folks within the organization was asked specifically what drew them to pick Neva as an acquisition target for them. And it was basically like, well, they didn't lie to us in our, applications of AI models, and they were just really talented people. And so it's like, wow, okay. Versus what you see from other organizations like Palantir, which has been trying to create machine learning, digital twins, AI applications from day one, and are now just getting to the point where they're adding a user interface to connect up to those things. It's like those things have already been embedded in who Palantir is. Now they're just kind of creating a user interface, which, is easy comparatively to what they've already been doing, which is creating the digital twins and stuff of the like. So that being said, and then that's part of the negative. So the benefit was AI. The benefit is they're doing really well in terms of revenue growth from last year to this year. The negatives are the following, and I kind of already alluded to this, that Mike, hope you're feeling better, buddy, after the coughing fit you had on the conference call. They kept talking about the three different ways that efficiencies are made and the reasons why revenues are going down. One, they talked about just the fact that they're moving from a lot of AWS to, I forget what other kind of cloud engine they're kind of using to be able to help compute. And so they're computing things faster, which takes up less bandwidth, basically. And so that kind of creates a headwind on their revenue growth. And then coupling that with the fact that there's backlogs of data, people are changing their policies. They talked a lot about the CFO being in the business saying and cutting down from a macroeconomic environment. No, you can't spend this money. But in the same breath of the conference call, they're talking about how there's so much pent up demand that the CTOs are jumping at the bit to be able to get a lot of these future products that are coming out of Snowflake. And so it's kind of like, well, which is it, right? And I get it from a macroeconomic standpoint, people are kind of being more cautious. But if they truly see the benefit of your product and they truly see the efficiency gains that everyone talks about from a Snowflake perspective or even a Palantir perspective, do you really think they're going to hold back, right? And then coupling that with, they talked a lot about cloud storage and basically people changing the way that they do data management, which is, say, they used to go from an average of 5 years of backlog of data to be able to refer to be able to feed their engines, machine learning, their data analytics, what have you, going down to 3 years. And they coupled that with why there's such a drastic slowdown. It's like, I get that would happen a little bit, but to go from a 120, 170% over the past 20, 21, 22 years to basically getting to the 60% growth or 50% growth that you had from 2022 Q1 to 2023 Q1 to now saying that you're barely going to be up. Like if you forecast out the 630 million that they're getting in Q1 out for the remaining 3 quarters, you're going to be at 2.5 billion. So you mean between now and at the end of the year, they're all going to be able to grow in terms of running rate $100 million. That's no bueno, right? That's 4%. And a company going from, you think about it, it's like, okay, so let's say they go flat next quarter and maybe they start to jump their revenue back up again in terms of growth, which is what they were alluding to in the conference call. This is a macroeconomic environment problem. The efficiencies that we're gaining in the cloud computing, coupled with the people, declining their backlog and storage, which they're making a lot of money off of cloud fees, and then coupling that with macroeconomic environments, so people aren't signing up as quick, but they still have massive demand. It just changes it, right? And I'm not saying that the company's dead, right? And the thumbnail is going to give you guys all this, oh my God, it's going to zero. I'm not saying that. I think that what the thing is, though, is that this is a pivot point within Snowflake where you honestly need to look and say, they thought, just like a lot of people thought with Palantir, that this is going to be growing at, massive rates. People were anticipating 60, 50% for the next however many years. And the truth is it's looking pretty rough. And what I would say is I would continue to watch. I'm not saying if you have the stock to just wholesale it. I'm not saying anything like that, but put it on watch, right? Just like how literally a year ago we were talking with Sachin and Palantir Weekly, and we were saying the exact same thing. Put it on watch. Meanwhile, the man, meaning Sachin, and hopefully you don't mind me saying this on your behalf, buddy, had approximately, if not at that point, 100% of his money within Palantir. So he was super critical of the growth rates and stuff of the like. So I'm not saying Snowflake's going to zero or anything of the like. And, it seems like they have a great product in terms of being able to get to sales quickly. But that's the last thing I'll touch on is the Q&A session specifically around Snowflake. If you look at their sales department, it's about 50% of their headcount. They have about 6,300 employees as of the end of this quarter, 2,900 of which are sales and marketing. So you think about 45% of their total headcount is basically sales and marketing. What they mentioned was they are only backfilling positions. They might move people from different regions to be able to help get things up to speed. But at the end of the day, they're basically saying sales needs to, get there. Frank, who's a sales guy, right? That's why they brought Frank in. He's the sales guy. He's the CEO, sales guy. I think he does a great job, right? Sales is his thing, and he's doing a great job of it. They basically asked him straight up, is this a macroeconomic environment thing? Is this a microeconomic? Are people not meeting their sales quotas, what have you? He said, I've never been more proud, basically, of the sales team they have. They're running on all machines. Of course, there's some efficiencies that people can make with any sales organization, but overall, doing relatively well from that perspective. It's all macro. So keep that in mind, especially if you had Palantir and Snowflake or any other sort of data analytics platforms. Invest in which one you see fit based off of what you want. They're all slightly different. Especially with Microsoft Fabric coming out, which I have to make a video on as well. I did some analysis on that. But, this 58-minute call, two shining things, sorry, and I missed the one, is they also have Blue Yonder, which is a supply chain management company, and they were really excited and hopped up about their first supply chain management company really signing on. And I'm excited for them. That could have some legs, and so that's something to also keep in watch. But to go from such a drastic shift where, it might even be anemic growth over the next couple quarters, is just something I would continue to watch. And so I don't make videos on Snowflake. I don't generally comment on Snowflake unless it's a comparison between Snowflake and Palantir and how they're different and similar, but mostly different, especially for long-term analytics and long-term growth perspectives, in my opinion. Do I continue to think that Snowflake is going to win in the short term? If you compare the two in terms of, company performance, rather, not necessarily stock price, but company performance, yes, I think Snowflake will outcompete Palantir in the short term in terms of company performance. I believe that, Snowflake will kind of pick up, but it begins to show the weaknesses in the armor of Snowflake, which everyone was kind of touting how great of a growth company it is. And so look deeper into the headline numbers. The headline numbers, we'll pull them up here, show something great, right? You'd say, holy crap, here we go again, right? And, let me just pull it up for you guys all here. You'd say, oh my God, here it is. Here are the headline numbers: 50% year-over-year revenue growth, $151 net dollar retention, continued, customer momentum, 370 people joining, with $1 million product sales. I get it. But to then say, okay, we have 630 or so million in revenue, multiply this out by 4, you're getting to 2.5 billion, and only say you're going to get 2.6 billion for the next 3 quarters. That's scary, right? That means that this is going to flatline, come down a little bit in Q2 and slightly go up again, or it's just going to slightly go up in Q2 and Q3 and Q4. So like I said, it's not something where I would say, get rid of it completely, but it's something to definitely put on watch and, just think about it in that perspective. But I wanted to provide that context to you guys, so much so that I listened to the 58 minutes. And, a lot of times I listen to these conference calls, not really planning on making a video. But this one the contrast between listening to, and this continues to give me optimism about Palantir, the contrast of talking about the future and how bright things are at Palantir, even though revenue growth has slowed down slowly, versus the on the back of the heels with Snowflake. It's, what I think is Palantir has been on the back end of a lot of hate over the past 2 years with respect to their sales execution strategy and everything like. And I think investors and institutional investors mostly have come around to the fact that they are more so focused on the long-term prospectivity of their ability to generate great products, work with their clientele to be able to truly solve problems. And I think Snowflake is really coming to the point of they're a sales organization that has a pretty decent product. I'm not going to say it's a crappy product. I've never used it, but I've talked to some people that have used it and they say they like it. So I'm going to give them the benefit of the doubt that they have a decent product, a phenomenal sales team. And I think things are starting to finally get to the point where they can't just make up for those opportunities of gaining revenue through just throwing a sales team. They need to come up with solving problems, which there was a little piece on that. There's Snowpad or Snowpack. Sorry, it's not Snowpad, Snowpack, where you can kind of create your own custom applications, stuff like that. It's like, that's all Palantir is. Like, Palantir is going to embed themselves in your organization and help you create applications versus, and they were talking about how the usage of that went from 20% to 30%. That means the demand for Palantir-like handholding within your organization is there. And so I anticipate the more and more people that use Snowpack are going to say, I don't get it. I don't understand it. I don't want to create my own applications. We want to work with somebody to help us create our applications. And eventually, I'd assume a fraction of those people that use Snowpack and get frustrated and truly want to solve problems will eventually linger over to Palantir. But that's more of a long-term problem. We're talking about quarterly issues here. But I don't think that you can turn the dial that quickly within a quarter to the point where you could say there were some weeks in April, and this was on the conference call, where things were completely flat and there was no growth. And then there'd be slight growth. They never said anything about anemic, growth or anything like that. But then they said there was some weeks within May that saw pretty good, growth, and others that were kind of So I'm thinking Q2, if it doesn't show up negative, it's definitely going to be single-digit growth comparatively. And it would be a huge surprise compared to what the kind of forecasts that they're providing out for the remaining quarters of 2024 are. Keep in mind, 2024 for Snowflake is actually 2023. So that's where I'll leave it. For now, I'll just, 40 of you guys in here, didn't expect it. I was just going to record this and see, if anybody wanted to chat, ask some questions, I'd be more than happy to do so. But at the end, I'll probably take some time, cut up that, 20-minute, synopsis of what happened at Snowflake and post it as a separate video. But for now, let's hang out, let's chat. If any of you guys have questions, happy to see everybody on here.